On 30th September 20x1, entity A issues 2.5 shares in exchange. Sir, read carefully. This will take time and also some effort also mentally. On 30th September 20x1, entity A issues 2.5 shares in exchange for each ordinary share of entity B. So every share we buy in B, we are paying our own 2.5 shares. All of entity B's shareholders exchange their shares in entity B. So 100% shares of B you bought. Therefore, entity A issues 150 ordinary shares in exchange for all the 60 ordinary shares of entity B. That means you purchased 100% shares of entity B from their existing shareholders. As a PC, you offered your own shares. The fair value of each ordinary share of entity B on this date is 40 rupees, and our company ka share price, the quoted market price of A share, the share what I have given, it is having a value of 16 rupees. The fair value of entity A's identifiable assets on 30th September 20x1 are the same as their carrying amounts, except that the fair value of A's non-current assets is 1500. Wait there. You'll not write anything, just watch. Sir, there are two entities now. Entity, okay, wait, let entity A limited will write. What is the other entity? B limited. B limited lo, sir, actually how many shares are there? 60 shares are there. 60 shares are held by existing shareholders of B limited. What I did is, I purchased off all 60% shares, all 60 shares here by issuing my own shares as PC. So, 60 shares, whatever these fellows have, that I bought it off here. In return, what I gave as PC is my own company ka 150 shares issued as PC. Up to here, sir, you will not understand that this is a reverse acquisition. How you will understand it? You cannot understand, sir. You simply purchased investment in B limited by issuing your own shares. Entry will be investment account debit to share capital. The reverse acquisition and thought each stage will not come, but come down in the balance sheet. Come to shareholders equity in A limited. Shareholders equity, they are having only 100 shares. My company lo already only 100 shares are there. Now as PCI issued 150 shares to somebody. So total number of shares will be 250. 250 lo 150 are held by outsiders. What does it imply? B limited ka old shareholders, they now start controlling our A limited. Do you understand, sir? Apparently it looks like A purchased all 100% shares of B limited. In process you purchase 100% shares of B limited and you issued 150 shares as PC to old shareholders of B limited. They now become major controlling power in your company. So in your company, shareholders of A limited, they are having how many shares? 100 shares. This is the original deal, sir. This deal, if you reorganize and properly write, how it looks is, means after this entire drama is over, who is the topmost company now? Not B. B is last company. Control is with B only, means B limited ka shareholders only, but in the legal chain, B limited has got how many shares? 60 shares. All 60 shares, 100% are now held by whom? A limited. A limited how many shares are there? 250 shares are there. 100 original there. Now they issued 150. Total 250. 100 and 150 are held by two different people now. Now, existing shareholders of A limited, they are having 100 shares. New shareholders of A limited, who are also old shareholders in B limited, these people are having 150 shares. So out of your total 250 shares, 150 shares are held by outsiders. That means they are having how much percentage holding? 60%. And these fellows are having only 40%. So because of the acquisition of 100% shares in B Limited, you ended up losing control in your own company, and you gave your control also to the old shareholders of B Limited. Now you observe, sir, these shareholders of B Limited, once upon a time, anyway they were controlling B Limited ka business. Because of this, they are not only controlling B Limited indirectly, they are also controlling A Limited directly. This is a clear case of a reverse acquisition. Earlier reverse acquisition, whatever I gave you, is the absorptional reverse acquisition. E particular example is not absorption, it is control acquisition. Controlling power purchased. B is not closed, A is not closed. Companies are like that only, control is moving hands in that reverse acquisition case. So whatever you are seeing is anta legal position, sir. Now tell me, based on this, who is acquiring who? B is acquiring A, but it looks as if A is acquiring B. So who is parent here? Legally. Who is subsidiary? Legally. But in reality, B is the parent, A is the subsidiary. And if B produces consolidated financial statements, how will it look? That should be your final answer. Actually, A is the parent, B is the subsidiary, legally. Reality law, you should present it as if B is the parent and A is the subsidiary. That is substance form law accounting. Reverse acquisition accounting will be completely different from how it appears legally. So this is whatever we have written till here. This is a legal position. Somebody want to copy, can copy it in 1 minute fast. A legal position is just for understanding who got control over who. Based on this, accounting is done in a different manner. So accounting ki how to think, that is next level diagram. For first, if you understand that, then we will go there. So conclusion is, in substance, B Limited acquired control over A Limited. You can ask me, sir, how did B Limited acquire control? B Limited is the last company in the chain. It is a legal arrangement. Legally it is looking like that. Sir, if B Limited wanted, can't it directly buy all the shares in A Limited? Instead of doing this drama indirectly, directly also B Limited could have purchased all shares in A Limited by giving its own shares as PC. So A Limited ka old shareholders will now become shareholders in B Limited with minority power. B Limited ka shareholders will anyway have majority power. I could have done whatever I could have done directly, I did it indirectly. So it is looking like this, the legal arrangement. Accounting is done in a different way. Means accounting is done considering the real picture. Now, so from this conclusion is, therefore, B Limited is the accounting acquirer, accounting parent, and A Limited is the accounting acquiree. Legally, A Limited is parent and of course the acquirer. And B Limited is the acquiree and subsidiary. So who is parent? A is parent, B is subsidiary legally. Who has to do consolidated financial statements? Legally, who has to prepare consolidation? A has to prepare consolidation. But what IND AS 103 asks is, consolidation is done by A Limited only, but the consolidated balance sheet should look as if not A consolidated B, but it should look as if B is a parent and it is consolidating its subsidiary called as A. But the final balance sheet name should be A Limited. So this is little reverse thought, easy only, we'll get adjusted to that. Sir, the arrangement is clear now what they have done. Now how to think is like this. If B Limited obtains control over A Limited directly instead of reverse acquisition, then how the picture would look like? Now, shareholders of B Limited is B Limited, shareholders of A Limited, A Limited, here they are having 60 shares, our people are having in our company 100 shares. Put legally how it happened, already we have drawn the diagram. Forget legally. Legally we observed and we understood that B obtained control indirectly. Had B obtained control directly, how the transaction would have been executed? So instead of A buying 100% shares in B, this time we will make B buy 100% shares in A. So had the transaction done directly without any cheating and reverse acquisition, it would have looked like this. B purchased all 100 shares in A Limited, and as PC issue shares, how many shares don't know, as PC. How many shares I would have issued as PC to those shareholders? Time being I do not know, because it is not legality, no sir. So question or data won't be given, that you have to catch, you have to understand on your own. Now how will I make this analysis? Look at this. Had I done like this, then ultimately picture would have been like this. The last company would have been A Limited. A Limited lo there would have been 100 shares. All 100 shares would have been held by B Limited. In B Limited, how many shares are there? I do not know. Not 60. 60 shares are there presently, but they are also issuing some extra shares as PC. I do not know how much is that. But in B Limited, you will have two group of shareholders. One is existing shareholders. The other one is new shareholders. In new shareholders are actually old shareholders in A Limited. Sir, what I know is these people are having 60 shares. This much I know. how many shares I would have given to A Limited shareholders, that only if you catch, answer is over. The rest of the drama is very, very, very cheap, sir. Some falls down slowly. Yokka point if you have to catch. Sir, how will I know that? Simple. Look at the legal arrangement. Legal arrangement lo A Limited ka old shareholders ni you reduced them to how much percentage shareholders? 40%. So ultimately your goal is B should obtain control on A, and A Limited ka old shareholders should have only 40% shares. Our shareholders should have 60% shares. Adi nee plan. This fellow's plan is that, and you have to catch from this legal arrangement. And had I done this directly, if my shareholders should have 60%, for 40%, how much shares they should have? How many shares? Obviously 40 shares. So how you should think is, for 60%, if you are having 60 shares, for 40%, how many shares they should have? That is equal to 40 shares. So I would have issued 40 shares to them had I done this directly. So here number is 40. You have to do the entire consolidation assuming that the transaction actually got executed like this. E diagram means keep this diagram in mind and do the entire business combination consolidation effect with this. This is what they expect you to do. So tell me, sir, who is subsidiary now? Substance arrangement A. Who is parent? B. So keeping this in mind, if I do consolidation, how will it look? I want that. But legally consolidation has to be done by A Limited because that fellow is the legal parent. So in A Limited name to B will consolidate A Limited. So this is legal arrangement, this is accounting arrangement. Legal arrangement, why did we draw, sir? If I not draw legal arrangement, I did not know who got control over who, number one. Number two, I would not know A Limited ka shareholders are having ultimately how much percentage, and I would not have known. For that purpose, I draw legal arrangement. Accounting is not done based on this. Accounting is done totally based on this. Had I done this thing directly, then how the picture would have appeared? Ide picture balance sheet also have to present. In this only one thing is missing. What is that? How many shares B would have given to A Limited ka old shareholders as PC? That the question will not tell you. That you have to catch on your own. That's all, sir. That's all. Rest of the sum is normal. Now you see, as usual, I have to work out PC and all now. Accounting is to be done based on above arrangement. As if B Limited acquired control directly in A Limited. Sir, all this is imagination only, no? Exactly. There's no doubt, pakka imagination. Kana imagination is correct because this is substance over form case. But legally, if I go, it looks like A obtained control over B because A is the parent, B is the subsidiary. But the people behind A Limited are B Limited ka old shareholders. So legally is not correct. So substantially imaginary accounting you have to do. This is substance ke correct. Substance over form, but this is correct. Anyway, first calculation. Okay. A question nothing is there, so they'll ask you to do consolidate balance sheet. Rest of the question nothing is there, don't worry. So you have to do calculation of purchase consideration. Tell me PC and become pro. Tell me. Who paid PC to who? Forget legal arrangement. Only black color. No brown, no blue. B is acquiring 100% shares of A Limited by issuing its own 40 shares as PC. Antega sir? Right. But wait there. Did we discuss one case of PC where a share to share exchange is there? Share to share exchange means what I am buying is shares, what I am paying is my own shares. In this case, either fair value of shares issued or fair value of shares acquired, whichever is more clearly reliably measurable, isn't it? Both methods are possible in this sum. Do both and see which one is more reliably measurable. That one you have to take. Read the first paragraph. They gave you A limited ka share price also. They gave you B limited ka share price also. Take both. You will have two PCs now. Select whichever is more trustworthy, whichever is more reliable. So, method 1. PC is equal to fair value of shares issued by B limited. So hypothetically, B limited will issue how many shares? 40 shares into B limited ka fair value is given in the question. Go and see. See here, language. The fair value of each ordinary share of entity B is rupees 40. So 40 shares we are issuing. 40 rupees is the price per share or fair value per share. So the answer is 1600. So this is one PC. Method 2. PC is equal to fair value of shares acquired. How many shares did you acquire? In substance only 100 shares, not 150. Forget about that legal arrangement. Look at only this. How many shares did you acquire from A limited? In substance, if you want direct control, 100 shares. 100 shares. What is the fair value? One exam, which is also equal to rupees 600. It is pure coincidence, sir. Now it is kind of useless to ask which one will you take, because both the numbers are same. If the numbers were not same, then you have some decision to make here. Which one will you pick up then? Listen, sir. This 40 is given as fair value of share. If 16 ki description is not just fair value, it is quoted market price. Which one do you trust more? Quoted market price. Are the external evidence? It is fair value for everybody. Sir, imagine there is a listed company, there is an unlisted company. Listed company ka share price quoted market it is there. A value I can trust. Unlisted company is there. Unlisted company ka share ka value I want. Since it is not quoted, you will apply different methods. Like you have your intrinsic value method, you have dividend discount model, earnings price model, EPS into PE ratio, free cash flow model. So many stupid methods are there in your AFM subject. All that methods you apply. All that methods versus quoted market price. Quoted market price is more reliable because even based on so many assumptions, quoted market price is a fact. So which one is more reliably measurable? Quoted market price. Quoted market price to fair value. Intrinsic value method also fair value. But between these two, who is better one? Quoted market price. Sir, how do we know, sir? You will learn it when we do a standard called as IND AS 113. Level 1 inputs are considered more better than level 2 and level 3. Later on, when we do 113, we'll do this is cheap standard, nothing else. So, quoted market price is more reliable measure. Therefore, method 2 is preferred. Sir, E sum low, it does not matter. You select any method, answer will be same only. No, sir, it doesn't matter. But if you don't write this analysis, you lose marks. It doesn't matter for your answer balance sheet. Marks ki definitely it matters. At 40, 60 endiki cheda, time pass ki cheda. You have to write that 40 ka answer also, 16 ka answer also. If you write that answer, you should know that one particular case low, even the fair value of shares acquired also can be accepted as PC. The PC step low we already covered. So now we are applying that. If the numbers were different, it would have been better. But anyway, this is how you have to remember. Sure. Now let's do consolidation. The question requirement is that only. After telling all this, what he says is, he talking something about earnings. Don't read that. Come here directly. A paragraph don't read. You'll get confused. Leave it. Later on we will see. Calculate the fair value of consideration transferred. Okay. Measure goodwill. Okay. And also prepare consolidated balance sheet. Then he is also asking something else. That is later on we'll see. So now we'll start the process of consolidation. So, in consolidation law, what you should keep in mind? Who acquired who? B acquired 100% shares in A. Keep that in your mind strongly and do of consolidation. That's all. What happened? No. Not legal arrangement. Don't see legal arrangement. Legal arrangement is just given to understand who got control over who. You understood that, and the entire sum is based only on this. The second diagram, not on the basis of first set of diagrams. The second diagram, the entire sum you have to solve. ఏం చేయం పీసీ ప్లేస్లో 600 కాదు 1700 పెట్టుకుంటాం అంతే. ఫర్ ఎగ్జాంపుల్ ఈ నెంబర్ ఇన్స్టెడ్ ఆఫ్ 1600 సపోజ్ ఇట్ ఈస్ 1900. ఫైన్, ఇన్ దట్ కేస్ పీసీ 1900 ఉంటుంది. గుడ్ విల్ అమౌంట్ మారిపోతుంది అంతే. నథింగ్ విల్ చేంజ్. They both are same కాబట్టి 600. If it is not same means let it not be same. No, who cares whether it is same or not? I want correct measure. If it is 1900, suppose a quoted market price is not 16. Had they told you it is 19 rupees, your answer would have been 1900. We will do the sum with 1900 PC. That's all. Goodwill step low PC will be 1900. So automatically goodwill will be higher goodwill. Let it come. Let it come. No problem. That is not going to change the fact that B got control over A. ఆ ఫ్యాక్ట్ అయితే చేంజ్ అవ్వదు. ఇది పీసీ నంబర్ క్యాలిక్యులేషన్. ఏమా అంటే అసలు ఈ మెథడ్ 1 రాయకుండా డైరెక్ట్గా మెథడ్ 2కి వెళ్ళిపోదామంట. దట్ యూ కెన్ డూ, బట్ యూ లూజ్ మార్క్స్. దట్స్ వాట్ ఐమ్ సేయింగ్. వాట్ షీ ఈస్ సేయింగ్ ఈజ్ ఎనీవే వీ విల్ సెలెక్ట్ దిస్ ఓన్లీ. నో, వై టు ఈవెన్ డూ దిస్? That fellow wants to know whether you know this point or not. ఇప్పుడు అది నీకు తెలుసు, నీకు తెలుసు, వాడికి తెలియదు కదా. సో యూ హ్యావ్ టు రైట్ అండ్ షో ఆల్ దిస్. యూ హ్యావ్ టు ఎక్స్ప్లెయిన్ దట్ కోటెడ్ మార్కెట్ ప్రైస్ ఈజ్ ఏ మచ్ రిలయబుల్ అండ్ ట్రస్ట్వర్తీ మెథడ్ దాన్ ఆర్ ట్రస్ట్వర్తీ మెజర్ దాన్ ఎనీ అదర్ మెథడ్ ఆఫ్ ఫేర్ వాల్యుయేషన్. ఆ పాయింట్ యూ నో, బట్ హీ షుడ్ ఆల్సో నో దట్ యూ నో. సో ఫర్ దట్ వీఆర్ రైటింగ్ ఆల్ దిస్. యువర్ పాయింట్ ఈస్ టేకన్. ఐ అండర్స్టూడ్ దట్. బట్ యా సి సార్, ఇప్పుడు అది ఒక 12 మార్క్స్కో ఎంతో ఈ సమ్ వర్త్ ఉంటుంది. బ్యాలెన్స్ షీట్ మనం టాలీ చేస్తాం, కానీ మనకి 8 మార్క్సే వస్తాయి. ఆ 4 ఎక్కడ పోయింది అనేది అది చాలా చిన్న ట్రివియల్ పాయింటే. బట్ ఫర్ దాట్ ఆ మార్క్స్ అలొకేషన్ సమ్ పాయింట్ విల్ బి దేర్. సమ్ మార్క్స్ విల్ బి అలాటెడ్ ఫర్ దిస్ ఎంటైర్ క్యాలిక్యులేషన్. అది చాలా చిన్న పాయింట్, బట్ స్టిల్ దానికి 2 మార్క్స్ 1.5 మార్క్స్ సంథింగ్ విల్ బి అలాటెడ్ ఫర్ దట్. యూ లూజ్ దట్ మార్క్స్. లాస్ట్ ఎగ్జామ్షన్ అనుకోవాలి సార్, లాస్ట్ ర్యాంక్ అనుకోవచ్చు, అనుకోరు. Anyway, when I was in CA final, I was pro in consolidation. मतलब consolidation question in old syllabus when accounting standards were there. Consolidation is biggest chapter. You did hardly some big questions, hardly 8 or 9 you did, not more. Not because it is exam batch. In normal batch also only as ICA point of view 3 questions are there. Okay, I do some 12 or 13. Associates some 4 or 5. So 20 big questions we do roughly. Okay. When our time, sir, 75 questions, big size questions. As first question, second question, there is no link only. Heavy questions. Normal pace if you do, minimum 1 hour it will take. That kind of very difficult, very deep consolidation questions we used to have for our exam. I got so much of practice in that chapter that I can finish any consolidation sum maximum in 7 minutes. On pakka balance sheet has to tally. That kind of practice I did. I taught consolidation to everybody, whoever is around me. Okay, I was too good. Consolidation, there was never an exam without consolidation. First time I say life low, sir, CA final consolidation did not come when I wrote. Okay. Sir, everybody understands consolidation. Means I'm talking about very difficult question. They understand. But doing low, sir, so mind will tell you so many ideas, so many adjustments. Somewhere a mistake చేస్తారు sir. That will drag you. Whatever should have gotten over in 20 minutes will drag you to 1 hour. Gone. Rest of the paper also over by that time. Time will not be sufficient. This is general mistake what used to happen nowadays. Consolidation not there. Exam lo everybody happy. Where is no consolidation? No consolidation. I was literally blood. There is no consolidation. I planned my entire rank aim based on that chapter, and that bloody chapter did not come in the exam. And they asked some questions which are never asked in CA history. Okay, there was some chapter called as NBFC. From that questions came out. Almost some 25 to 30 marks. I did not even know that they existed in syllabus. Of course, that's my negligence. And my teacher did not teach that. Okay, so we did not have this much of awareness like how you people are having. So of course we should have been more careful. I wasn't. So 100 marks low, 30 marks, so 0. I did not even write the question number also. What will I write? I don't know anything. 70 marks I wrote, 66. The strike rate is very, very high. Virendra Sehwag only. So strike rate high. I got a rank eventually. But imagine a 30 marks had I prepared, or consolidation question had come on that day, it would have been altogether a different story. Of course, it still doesn't matter. But still, rank, how does it matter? If you are going to job, it matters. For me, it was just that rush of blood. We should get rank. We should get rank. Ultimately, what did I do? I didn't work anywhere much, at least. So we came here. Of course, that helped me in another way. I didn't sell rank and all. No, another way means not like that. No, sir, I was having an opportunity in Goldman Sachs, 25 lakhs package. Not now, when I passed. I rejected it because that fellow offered it in accounting systems. Who wants to do accounting of Goldman Sachs, sir? The fellow is doing investment banking. No, he is not giving that wing to CS, it seems. If he says that CS are not brainy enough to handle their investment portfolio or to be in that section also, it seems. Said we'll give accounting services. Accounting, if I want to really do, I'll do in manufacturing entity, not in service organization. Service organization, nothing will be there. Software will do. You just have to see and clap and get money, salary. So that's less dynamic, so I skipped it. So anyway, sir, the moral of the story, don't leave anything. No matter how difficult it is, how easy, do not leave anything. Sir, can I leave this, sir? And many people ask, what answer will I say? If I tell this entire story, that fellow will say, there's no point of asking this fellow again. If time is there, cover everything. Less time is there, cover at least little bit of what you wanted to leave. So that is the last option. Leaving is very bad. That's very risky, sir. It will happen like me. Sir, I was good in that 70 at least, so I passed. It could have gone either way, no, sir. I was just got lucky that day. Step number 1. What is step number 1, by the way? Forgot. Statement of net assets in subsidiary. Who is subsidiary, by the way? A Limited. Do I need to prepare 3 columns? Not required. Because date of acquisition and date of consolidation both are same. There is no post-acquisition period started yet. Take the share capital of A Limited, please. 300. 300. What do they have? Other equity, retained earnings, directly given, retained earnings. $800. Share capital plus retained earnings will give us book value of net assets. Is there any asset which is fair valued? See the question, if something is given, something is taken over at fair value and all, bring it on. See, somewhere it's given. The fair value of entity A's identifiable assets are same as their carrying amounts, except that the fair value of non-current assets is 1500. What is the book value of non-current assets? 1300. 1300 assets now revalued at 1500. So 200 rupees you have to consider. Add revaluation profit on non-current assets. Sir, additional depreciation you will provide, sir. Are post acquisition period are not there? What will you provide? 1500 minus 1300, 200. DTL I will create, sir. Good thought, but tax rate is not given. Thought should come, sir. Thought not coming is bad. After doing so many questions, revaluation profit, if you see, deferred tax liability, deferred tax asset, thoughts should come. Question tax rate is not given, so we will leave it. This is fair value of net assets on the date of acquisition. Chalo sir, step number 1 is sorted. Step number 2. Goodwill capital reserve. PC for 100% acquisition 1600. NCA is 0. Net assets on the date of acquisition 1300. So that will create a goodwill of 300. Step number 3. NCA for CBS, it does not matter because anyway NCA is 0. Step number 4. Other equity for CBS. Whose other equity I should write? B only. Good. Very good. Retained earnings in B. 1400. Okay, 1400. Add share of post acquisition. Nothing. Instead of goodwill, had you gotten capital reserve, then you would have considered that in step number 4. Right? Oh? What happened, sir? You have any different ideas? You have any different idea? No. Good thought, but I'll tell you that. He's asking, sir, why are you not writing securities premium? Thought is correct only, but we'll talk on that. Securities premium, why it will not come is, sir, means to answer your case, B has purchased 100 shares in A Limited by issuing 40 shares as PC. If 40 shares really issued, that's why it will not come. Yeah, your thought is correct, but anyway, our confusion will slowly start. Don't worry. Correct, sir. Consolidated balance sheet of who is doing consolidation? B is consolidating A in substance, but legally drama should happen in the books of A. So consolidated balance sheet of A Limited. Legal parent. Doesn't sound good. Let's say legal acquire. Fine, leave it. You shut up. Okay. As at 30th September 2021. Should appear as if B Limited consolidated A Limited. Don't write that in the exam, just for understanding the route like that. Anyway, start with the assets and liabilities, sir. Who's the first item? Non-current assets. Ignore schedule 3, sir, because the data is not amenable for schedule 3 format. Normally directly I'm writing. Non-current assets. Who is parent? Substance. B limited. So first B limited I am writing 3000 plus A limited 1500 at fair value. 4500 current assets, sir, but before that goodwill 300. Current assets, B limited 700, A limited is 500. That is at fair value only. Question they told. Just asking, a goodwill, full goodwill or partial goodwill? What is this? 6000. Huh? Next one. Share capital. Don't write anything for share capital. That we will talk later on. There is some drama in that. Other equity. Other equity we already worked out. 1400 for B limited and 0 for A limited. 1400. That also, like he said, something can be changed if you want. But anyway, first you write whatever we know, whatever we do not know, we'll think later on. Non-current liabilities. What is the value, sir? 1100 plus 400. Current liabilities. Sir, balance sheet must tally, no? So 6000 is the total. I did not write one item. Which one? Share capital. Sir, I am giving you ICAC answer. I can do it in slightly better way. In fact, that is better presentation also. But let's not take risk. Whatever ICAC did, we did that. Tell me balancing figure. 2200. Okay. 2200. How did you get this? Pakka balancing figure. There is no second thought in that. Sir, when share capital of, ideally which company ka share capital I should write? If B is the parent. If B is the parent, whose share capital I should write there? B ka share capital. But why I cannot write B ka share capital is legally the balance sheet of A limited. A limited balance sheet, whose share capital should be there? A limited share capital should be there. How can I write B limited ka share capital there? Therefore, B limited ka share capital I did not write. Pony. Did I write A limited ka share capital completely? And that also I did not write. Now what is the 2200? First point are the balancing figure. Second, logically I'll explain. Go to the question balance sheet. Tell me what is the share capital in B? Ideally this should come plus B limited issued shares, 40 shares as part of acquisition. Each share ka value is how much? 40. 40 into 40. 1600, 600 my share capital plus additional share capital issued along with premium is 1600. 600 plus 1600 are 2200 ka the explanation. Do you understand, sir? 600 rupees is my existing share capital of B plus new shares issued ka fair value is 1600. Total it is 2200. Ideally, that is the explanation. In study matter, sir, I say answer. They did not explain this so detailedly. They simply put a balancing figure and left there. They explained 2200, but actually it is not just 2200. Why can't you write directly 2200 by splitting share capital and securities premium also is the balance sheet of A limited legal parent. But substantially we are doing B as parent and A as subsidiary. So 2200 ki explanation is like this. Share capital in consolidated balance sheet. Since B is parent, share capital should be equal to, in consol balance sheet is equal to existing share capital of B Limited plus fair value of PC issued 600 plus 1600, it should be 2200. So that is the explanation what ICA has given for 2200. But I would have presented in a much more better manner. A 40 shares low 40 rupees gada, 40 rupees 10 rupees is face value, 30 rupees is securities premium. Like he said, a 30 I would have parked it in other equity. But anyway, there is no point in doing the drama because it ultimately A Limited ka share balance sheet legally. So B Limited ka amount you can rate, but explanation you cannot give from B Limited's point of view. In the 2200, I put it as a balancing figure there, but I have a conceptual explanation for this. Sir, even if I split this into share capital separately and securities premium separately also, then also overall total will be same only, no, sir. Whatever I remove in share capital, I'll put it in other equity. Okay, that's not the point here. This is A Limited ka balance sheet. So this is legally balance sheet of A Limited. So total share capital is 2200. In 2200, how you have to explain is, in this how many shares, what is the number of shares, what is the face value, like that. Existing shares in A Limited. Go check balance sheet of A Limited. 100 gada. 100 shares. What is the face value there? I guess 3 rupees. So that is 300. 300 explained. Okay. New shares issued now. Actually, how many shares did I issue? 150. 150 shares into rupees 3. 450. So out of 2200, you can explain 300 plus 450, 750 as shares of A Limited. Remainder whatever is there, 1450. This is an adjustment reserve due to reverse acquisition. So the legal share capital must be explained, sir, to the reader of financial statements. So you have to do this extra note. The ICA did not give. So example, if you do not read, nobody cares. Example, if you read 2200 there, even if it's a balancing figure also, you'll get full marks for that. Because ICA answer is only like that. But the A Limited ka balance sheet kabatti, ideally you should give for better disclosure. That's it. Alternatively, what I would have done is, the explanation I would have given, but I would have split this into share capital and securities premium. I would have changed it to the other equity. Overall number will be same only, but still. So tell me, if 150 shares, whatever are there here, they are issued to whom? Is it correct? They are issued to shareholders of B Limited. 100 shares are your own existing shareholders ka shares. But because you issued 150 shares to them, they became the controlling power in your company. And hence all this story happened. The one part of the question. Another part of the question is there. Read here. Assume entity B's earnings for the annual period ended 31st December 20x0 was 600. Last year, sir, because current year is X1. 30th September this drama happened. But this is last year earnings of B Limited. And that the consolidated earnings for the annual period ending 31st December 20x1 were 800. If current year earnings consolidated. Assume also that there are no change in the number of ordinary shares issued by entity B during the annual period ended 31st December 20x0 and during the period from 1st January till the date of reverse acquisition on 30th September 20x1. Okay, sir, that is very nice. Sir, this EPS calculation will be slightly heavy, but as light you maintain your mind, so easily it goes. No, sir, it is not going. Then I'll tell you another alternative. So first alternative, try to understand. If you don't like that, second alternative, don't be under a frame of mind that we will see both, then we will decide. That is not correct. You should learn both the alternatives. So both you approach with equal mind. First one, let's do what I said it. He's asking EPS, sir, current year, last year, comparative also. Okay. So here what you have to very strongly keep in mind is EPS is disclosed in consolidated financial statements based on number of shares in A Limited, but B Limited is parent in substance and A Limited is subsidiary in substance. Therefore, EPS is given by considering shares of P Limited or shares, let's put it like this, shares in A Limited that are allotted to B Limited shareholders. For the year, last year first would easy. For the year 20x0, basic EPS. What is last year earnings given? 6. If you tell me divided by how many shares, then you are ultra pro max. 10. Which company का shares you should take? A Limited का shares, because it's A Limited का balance sheet. A Limited का P&L account legally. Number of shares also should be A Limited only. A Limited how many shares are there? 100 and 150 shares. Total 250 shares are there. But the 250 shares are there in the current year. The last year ka EPS. So denominator, how many shares should I take? Think again. Sir, in the current year, legally, I am having, last year legally I was having 100 shares. Current year also, I started legally with 100 shares. Later on, I issued 150 shares. Total it became 250 shares. In which year? Current year it became 250 shares. But I am doing last year ka EPS. Last year ka EPS la I should take last year ka shares. So ideally I should take how many shares? 100 shares? Wrong answer. Why I should not take 100 shares? Tell me, sir. 100 shares if you take, are you not taking the shares of subsidiary? Who is A Limited? Legally parent A, but accounting law that fellow is a subsidiary. So what you have to do is, E shares law, how many shares belong to accounting parent? Who is accounting parent? B Limited. B Limited, how many shares are they holding? 150 shares. So you have to take that 150 shares in the denominator into 12 by 12. Here you will get a small size mini heart attack. What you will say is, sorry, 150 shares are created in current year. No, how can I take this 150 shares for last year EPS? It is something similar to, one second, Astra. HE, not you. Look at this. Produce C Limited A formed in current year. Comparative. Did you club A plus B of last year and give comparative or not in C Limited financial statements? Last year C Limited is there, not there. Did you still give comparative? Yes, because C is nothing but A plus B. Likewise only, Conceptually 150 shares are not there last year, but B Limited, whoever is the real parent, that fellow was there last year also, no? So moreover you observe ఈ 600 earnings ఉన్నాయి కదా సార్, ఎవడ earnings అవి? రీడ్ దట్ లైన్ కరెక్ట్లీ. అవి బి లిమిటెడ్ గా earnings అవి. హౌ కెన్ యూ డివైడ్ ఇట్ విత్ ఏ లిమిటెడ్ కా షేర్ హోల్డర్స్ కా 100 షేర్స్ సార్? ఆ earnings were never belonging to 100 shares. They belong to B Limited ka old shareholders. B Limited ka old shareholders in this company are having how many shares? 150 shares. Therefore we take 150. Sir, ఇప్పుడు consolidated balance sheet you did, Indian consolidation chapter. Consolidation P&L you did. Whose share capital will be shown in the balance sheet? Only parent. Who is parent? Substance law. B. Substance law. B. So B's share capital only should appear. Since the share capital you are writing for B, EPS also should be done only for parent only. కానీ ఇక్కడ ప్రాబ్లం ఏంటంటే సార్, కాన్సెప్చువల్లీ ఇన్ సబ్స్టెన్స్ పేరెంట్ ఇస్ బి, లీగలీ ద బ్యాలెన్స్ షీట్ బిలాంగ్స్ టు ఏ. సో వాట్ యూ షుడ్ డూ ఈస్ take A Limited shares only, legal shares which are belonging to B Limited. That's exactly what I wrote here. Had you read this, little bit of thought would have started. Read there. EPS is given by considering shares in A Limited which are allotted to B Limited shareholders. Sir, why should I even think about B Limited shareholders? Because B Limited is a parent. For every sake, B is the parent, sir. కానీ B का shares I cannot take because we are in A Limited. But B का earnings I will take. Sir, B का earnings how can you take, sir? B का earnings are there in B का other equity. Other equity did you not bring into this balance sheet? 1400. You brought. ఆ 1400 లో B का last year 600 are definitely there. ఇది literally B Limited का balance sheet, sir. ఇందులో B Limited का last year earnings are there inside this. So definitely you have to take B Limited का shares. I can B Limited का shares I cannot take, because B Limited ka shares in some other company. This is A Limited. So what you will do is, this is number of shares held by B Limited in A Limited. That you will take. In this, keep no doubt, this is earnings of B Limited. B Limited earnings, why will they belong to A Limited shareholders, sir? B Limited earnings belongs only to B Limited shareholders. B Limited lo how many shares are there? 60 shares are there. Last year adi. Today 60 shares are not there, no. 60 place lo they are having how many shares? 150 shares. So a 60 place I just took 150, that's all. For the current year, if this only you got problem, this one, let's see. Basic EPS is equal to, what is current year earnings? 800 divided by, I'm directly rating. If you understand, you understand, otherwise I'll explain later on. 150 shares, when I assume that they are there last year, they are there in the current year also. Current year 30th September varaku A Limited you did not acquire. Later on A Limited acquired. A Limited lo how many shares are there towards those shareholders? 100 shares. It's like 100 shares are created in the last 3 months. So last 3 months only you created this, so you give them a weight of 3 months. Shares held by A Limited's, shares held by A Limited shareholders from the date of acquisition. So process this. 800 divided by 175. How much is the answer? 7 per share. Last year how much did they have? 4 per share. Sir, this is all very confusing, sir. Some may confusing ante EPS is next level. True. But I have alternative, no? Alternative lo pakka you will understand. 100% you will understand. 200% you will understand. Look at this. 2000x0 previous year. Forget about everything, sir. Just take only B Limited ka shares. 1120x0, 31st December 20x0. In B Limited, how many shares are there? That's it. Number of shares in B Limited. is equal to 60 shares. So if I compute weighted average number of equity shares for this year, it will be 60 shares into 12 by 12, which is equal to 60 shares. Sir, in this is the confusion. In last year, B Limited solo, sir. Now, basic EPS of 2000 X0 in A Limited's consolidated financial statements. Okay, let me put it like this. Sir, E 60 shares place low. These people got how many shares in A Limited? Read the first line of the question, all of you. Sir, you can't leave this. You can't say I'm tired to think. That is bad, sir. You can't be lazy like that. Read first line. Again, all of you, sir, please. A Limited issued 2.5 shares in exchange for each ordinary share of B. Correct? Okay. Remember this. This is 2010. I sir. Next, come to 2000 X1. Current year. Substance, we have drawn one diagram now. Go there. Substance diagram. Go there. Tell me, opening low, this fellow is anyway having 60 shares. What is the date of acquisition? 3920 X1. On this, you acquired 100% shares in A and issued, how many shares did you issue? Issued how many shares? You purchased 100 shares, but you issued 40 shares. Work out variance of last year. So it will be 60 into 12 by 12 plus 40 into 3 by 12. Enta 70? Exact 70, yeah? 70 shares. Sir, even which company ka shares? B Limited ka shares. But EPS has to be computed in A Limited books. A Limited books. Now, one share of B Limited is equivalent to how many shares in A Limited? 2.5 shares. So what you do is simply multiply the results with 2.5 and do the EPS. So basic EPS for 2000 X0 in consolidated financial statements of A Limited is equal to, last year earnings was 600. 600. E600 belongs to how many shares actually? Actually, E60 shares they should belong. E60 shares are now there where? They are there in A Limited with the name of how many shares? 150 shares. Because E60 shares now became, each share became 2.5 shares. 2.5. So that is rupees 600 divided by how much? 150. Yeah? So that is equal to rupees 4 per share. Similarly, basic EPS year low, it will be 800 divided. What was the variance you got this time? 70 shares. That into 2.5. 800 divided by 175. You will have your 4.5. That's all. This is more easy for you. It's like if B prepares its own consolidated financial statements, B Limited lo how many denominator will take? 60 and 70. But actually EPS is not done in B Limited books, it is done in A Limited books. So B Limited ka shares you have to translate into A Limited ka shares. Each share of B is equivalent to 2.5 shares of A. Our rule I applied and I converted. So here one share of B Limited is equivalent to 2.5 shares in A Limited. That's it. The rest of the drama is over. If you do not like this, the alternative you stick. This will work. It's easy, sir. Very easy to think. Okay guys, mark this question important. A question did not come yet. It's there everywhere. It's there everywhere. It's there in study mat, it's there in RTP and all. Exam only did not come. Mark important, sir. This can come. Okay, sir. One more reverse acquisition is there. That also, if you solve, I guess conceptually we are through. Here and there, small questions up to your how much energy you are left based on that. We'll do that. Yeah, come here, sir. 64. Sir, this is comparatively a very easy sum, but in this sum what is good is they have given some set of data. They asked you to do the solution assuming that it is a common control. Second assumption, assume that it is a reverse acquisition. Under two assumptions you have to solve. Common control is a very easy case, sir, that we will solve later on. We are in the mood of reverse acquisition. First we will do that. Read all of you. Box and Cox amalgamated on and from 1st Jan 2020. A new company, Fox Limited, with shares of 10 each, was formed to take over the businesses of existing companies. So Box is one company, Cox is one company. Both are shut down now. Both are taken over by newly formed company called as Fox. So Fox is taking over Box and Cox. Now, even if you do not read further also, imagine, sir, when Fox is a newly formed company, if I am taking over Box and Cox, who is controlling who? Who took over who? Legally, Fox took over Box and Cox, but Fox is a newly formed company, no? So inside this Fox Limited, either Box will be controlling Cox or Cox will be controlling Box, depending on who has got more number of shares here. Isn't it possible? This is a possibility. This is a reverse acquisition case indirectly. Second case is, in Box Limited lo, sir, there is one major shareholder who is having 100% shares. Cox also, that fellow has 100% shares. Box and Cox are owned by the same shareholder. Now Fox is taking over Box and Cox. This is common control transaction. So this data, this arrangement, both the cases you have to solve. Okay, read. This is comparatively very simple sum. Sir, reverse acquisition, you should not be scared. The first time if you listen very completely, no sir, it will be exhaustive only. I understand that. But it is not bad. It's just that you have to do it once on your own. As long as you see or you copy when somebody is doing, a comfort will not come. Reverse acquisition sums, you have to pen it on your own. Once you do, you will remember it. This remembering, you are scared that you will get confused somewhere. That fear will go away when you actually solve. That much it is not that confusing. You start and do. Anyway. Let's read what is there in the balance sheet. PP is there, investments are there, inventory, trade receivable, cash and bank, equity capital is there, other equity, and borrowings are there, trade payables. Other equity ka explanation, general reserve, profit and loss, investment allowance reserve, export profit reserve. Okay, but you should not call it as profit and loss, you should call it as retained earnings. That's okay. You should not question the question. Leave. Fox Limited issued a requisite number of shares to discharge the claims of equity shareholders of transfer or companies. How many shares did you issue? Requisite. He won't tell you. Also, the new debentures were issued in exchange of old series of both the companies. Okay. Prepare a note showing PC and discharge thereof and draft the balance sheet of Fox Limited. Case A. Assuming that both the entities are under common control. If this is the case, answer is very easy, extremely easy. Okay, so that we will do later on. Let's focus on the B part. Assuming Cox is a larger entity and their management will take control of the entity Fox. Gone case there. Sir, I am Fox, I am taking over Box, Cox. He says between Box and Cox, Cox is a bigger entity. So you tell me, sir, when a big entity and a small entity form a new entity, who will control who? Small entity will control big entity. No. Obviously, this Cox is going to control Box under the name of Fox. Do you understand, sir? Fox is legally a shell company, a dummy company, Fox. Cox actually wanted to take over Box. Instead of Cox taking over Box, what they did is they created another company called Fox, and Fox took over Cox also, Box also. Inside music, Cox will give to Box. Ultimately, Cox only will control Box. Whatever they could have done by simply absorbing and changing them then to Fox, what they did is They created another company called as Fox, got amalgamated with Fox. Who? Cox and Box. So second case. Fair value of net assets of Box and Cox are as follows. PP ka fair values are given. Inventory ka fair value is given. Fair value of the entire business is also given. Look at the last line. Fair value of the business. Whose business has got higher value? Cox. So when two entities merge, one with large value, one small value, by default it comes to our mind that the large company will definitely control the small company. So that's what they told directly. No. If this line is not there, also you should assume that only. Cox is a larger entity and their management will take control of the entity. So right, sir. 65 4. 64B. Legally, Fox Limited absorbs Box Limited and Cox Limited. It's given that Cox is larger entity and it controls Fox Limited after amalgamation. Question of what they told is Cox will control Fox, but Fox, who is there now? Box only is there. So literally Cox will control Box. In substance, Cox obtain control over business of Box Limited under the name of newly formed Fox Limited. Fox Limited is a legal entity, that's all. Acquirer acquiree is Cox and Box. So who is Cox Limited? This fellow is accounting acquirer. Accounting purpose, this fellow is acquirer. Box Limited is on whom control is being exercised. Accounting acquiree. Is sum your thought process I am writing? This is the core of this sum, sir. If you remember this one line also, entire sum you can easily handle on your own. We have to do accounting in Fox Limited as if Cox is taking over Box, as if Cox Limited absorbs Box Limited. Much more openly, if I tell you, forget about this entire question, do the sum as if Cox absorbs Box. Balance sheet name lo write Fox, that's all. Adi new company ga sir, Fox anle em undadu etlana. So you record entries as if Cox is literally absorbing Box and Cox changed its name to Fox Limited. That's exactly what you have to do. A very straightforward sum compared to the previous sum. Previous sum, why it is lengthy is adi parent subsidiary control acquisition lo, that is reverse acquisition. Sir, amalgamation, absorption, reverse acquisitions are very cheap. As usual, PC consideration, always PC important calculation. Earlier sum, looking at the legal arrangement, I could work out the PC. Here, how will you work out? Indirectly they have given. Particulars. Box, Cox, Fox. They gave you the value of the business. See, Box ka value on their own is 11, Cox is 14. Fox ka combined value they did not give anything. If they don't give you combined value, you will only add them. 21,000. If the question gives you any value, you will take that value, because when two companies merge, a merged entity ka value can be more also sometimes. That's because of synergy earnings, what we see in AFM chapter. Percentage of holding. Sir, ఇప్పుడు ఇది 100% షేర్ హోల్డింగ్ కా వాల్యూ అయితే Box should have how much shareholding? Cox should have how much shareholding? Work out. 44%, and this fellow should have 56%. Sir, if my net assets worth is 14,000, your net assets worth is only 11,000. Tell me who should have more shares? Who should have more shares? Because I'm having more net assets contributing to Fox Limited. So, right. We have to think as if Cox Limited absorbs Box Limited under the name of Fox Limited and issues shares in a way that Box Limited's shareholders have 44% of total shares and Cox Limited shareholders have 56% of total shares. Number of shares in Cox Limited. Go look at their balance sheet. 7,000, 10 rupees shares, no, so 700 shares. This will be 56%. Whatever shares they are already having, that should be 56% shares to them. Therefore, number of shares offered to Box Limited shareholders 756 అయితే how much is 44 550 yeah? 550 shares. It's nothing, sir. You literally keep in your mind that Cox is absorbing Box. Don't even think about Fox. Cox Box ని as is గా అబ్జర్వ్ చేసుకుంది into Cox only. Name last లో will change. No? Value of PC is equal to number of shares issued into fair value of share in Cox Limited. 550 shares. Sir, Cox Limited ka fair value how will I know? You know, because our business ka entire value is 14,000. In that they are having 700 shares as of today. Rupees 20 per share, which is equal to you can ask me why to take too much trouble. 11,000 is already there here only. No, true. All 11,000 is 11,000. But you should know all this ultimately balance sheet you have to prepare. No, sir, how many shares and you will write? 50 issue shares as PC. 11,000 number you want, I can show you here only. 11,000 how many shares are there? What is the value? How much the securities premium and you have to know, no, otherwise balance sheet cannot come. Number you want 11,000 first one, don't I know value of box limited is 11,000? Why am I working out all this? To know the number of shares. PC number I already know. Composition I do not know. So the composition. That's it, sir. PC worked out. Next one. Goodwill or capital reserve. And then we'll hit the balance sheet. Sir, this is not control acquisition. NC and all will not be there. We are talking about absorption. So direct comparison, PC versus fair value of net assets directly. Purchase consideration with lot of difficulty worked out 11,000. B. Fair value of net assets in box limited. Sir, how will you know this, sir? How will you know this is book value of net assets in box limited. The share capital plus other equity add చేసుకోండి, sir. To that add any revaluation profit. They gave you some revalued numbers, add that. Book value of net assets in box these two 6,000 and 3050. If you add these two automatically are the assets minus liabilities. Can book value. What I want is fair value. Look at towards the end. That fellow gave you some revaluation figures. PP 9,500, inventory 1,300. This is 9,500. This is 1,300. So here to here there is a jump of 1,000. Here to here there is a jump of 50. So 9,500 minus 8,500 plus 1,300 minus 1,250. No, sir, I will do full big statement of assets minus liabilities. All the best. That also you can do. After a lot of time, you will get the same answer. 1,000 plus 50. Be easy. Do whatever is easy. 9,100, 10,100. Oh. C. Goodwill. Because PC paid is more. 11,000 you are offering for net assets worth 10,100. So you'll have goodwill of 900. Do the balance sheet now. Balance sheet of Fox Limited. Sir, it is name a Fox Limited, but in substance this is Cox. In substance, Cox Limited after absorption of Box Limited. A bracket say important. Means enter concept is there a red color line. Cox box and absorb cheste how will Cox balance sheet look? Ade final answer. Just name a Fox. Chalo sir, add one by one all the assets liabilities and close it off. So non-current assets. So you have PP. In non-current assets just like that. If you want hint is this, sir. You have to take Cox Limited at their carrying amounts, but Box Limited you should take them at fair values because Box Limited is a query. So first item you have PB 7,500 is mine. That follows I have fair valued it, no, 9,500, 7, 9, 16 plus 1, 17,000. Next to goodwill 900. What else? Investments are there. Investments are financial assets, so you have to show or else you lose marks. Investments Presentation, absolutely no compromise. 550 plus 1050. 1600. With this, non-current assets is done. Current assets. Inventories. Inventory also fair valuation is there. Okay, 2750 plus 1300 fair value. How much is this? 4050. Next you have again financial assets. Trade receivables. Cox Limited ka trade receivables are 4000. That fellow box is 1800. 5800. Cash and cash equivalents 400 450. Total you do 30,000. No? Equity. Careful here, careful with equity because you issued shares now. This fellow's 7,000, then anyway 700 shares are there. Plus if 550 shares whatever you issued into 10 rupees face value. 12,500. Other equity 2,700. Cox Limited whatever is there, that one, plus E 550 shares into securities premium is there. ఎంత మంది 8,200. Non-current liabilities. You have financial liabilities. Some debentures issued, no? So that we will park it in borrowings only, that is borrowing only. Both the debentures are taken over as it is. So 4,000 plus box low 3,000. 7,000. I guess only this much here. And then current liabilities. Current liabilities, trade payables. Trade payable is a financial liability. Trade payables. How much are 1,500 plus 1,000? Huh? It will tally off. Over sir. Come to 64A. Ide question ka A bit. Sir, that is slightly ambiguous. There is something which you have to kind of remember. But you know, the question is important, sir. Very, very, very important question. It came in the exam also, and also coming in RTP, MTP is every alternative attempt. So once again, they can ask this. Sir, again question same, sir. Box, Cox are there. Both are taken over by Fox. He says, Fox issues requisite number of shares to discharge the claims of equity shareholders. Debentures are also taken over. He says, workout PC, discharge thereof, and the balance sheet of Fox, assuming that they are under common control. So now there is some you have to again do, assuming that Box and Cox are already under common control. Now carefully listen, ma'am. But common control transaction, which method of accounting will apply? Pooling of interest method. Now pooling of interest method ka original rule is what? All assets, all liabilities should be taken over at book values. Correct? Now we'll anyway solve this, but roughly I'm doing it here. If I prepare Fox Limited separately here, what will be PP? It will be 8,500 plus 7,500. As it is, you have to add. Don't take any fair value. Investment also, as it is, I will add. Inventory also I will add. Trade receivable I will add. Cash and cash equivalent I will add. Literally. Balance sheet totals also will be literal merger only. Come to liabilities. Trade payables, as it is, 1,000 and 1,500 will add. Borrowings also will add. Now you tell me, sir, what will I write here? In share capital and other equity, what should I write? The question, had they given you PC, no, what I would have done is PC versus share capital I would have compared. A gain or loss I will adjust against the other equity. Remaining other equity I would have recorded. Stupid did not tell us PC. He says requisite number of shares are issued. Requisite number of shares, and how will I know? Do I know? I do not know. So what this fellow assumed is, presently how many shares are there? 6,000 and 7,000. So that is how much? 13,000 or 1,300 shares are there overall. What he believed is, since no information is given, we assume that the share capital of Fox Limited also is 6 plus 7, 13,000. Nothing is given, no sir. If you assume that this is 13,000, every asset you added, liability you added, obviously these two also you have to add. Are there any final answer? Sir, pooling of interest method kabatti what we know is assets we have to add, liability we have to add. Selling company ka reserves will come into the books of purchasing company, that also we know. But selling company ka reserves will come into books of purchasing company after adjusting the gain or loss by comparing PC and share capital. But PC, that fellow did not give us. So what we assume, PC is nothing but the combined share capital only. So PC is how much now? 13,000. Share capital also 13,000. PC versus share capital both are same. Gain or loss is 0. Entire other equity as it is will come off. So literally the answer is one more column you keep, literally add every item there. That's all. The answer. Where is little ambiguity is the question did not tell us the PC portion. Therefore we are forced to assume that old share capital ka combined amount combined PC also. Right. Write this point, sir. The little ambiguous, but it is important question, no sir. So we can't take a risk. We will write properly. We'll write this. Do. Box Limited and Cox Limited are taken over by Fox Limited and it is a common control transaction. Sir, how do you know it is common control transaction? I do not know, he told. How is it possible? Box Low, one major shareholder is there. That fellow is also major shareholder in Cox. He is already controlling Box and Cox. Now when Fox takes over Box and Cox, PC that Fox has to pay to that shareholder only. So that fellow will again become a major shareholder in Fox also. So Box ka business controlled by the same fellow. Cox ka business controlled by the same fellow. Now after this amalgamation, both the businesses will be there in Fox, still controlled by the same guy. Therefore, it is a common control transaction. Our story they did not give you, directly they told you that this is a common control transaction. Right. There is no specific information about PC. That is number of shares issued by Fox Limited to Box Limited and Cox Limited. So assumption, you have to remember this, sir. purchase consideration is equal to share capital in Box Limited plus paid up share capital in Cox Limited. So that should be 6 and 7, 3,000, sorry, 13,000. Is it combined PC both for Box plus Cox? If you look at the question, there is one small wording there. In that, one big twist also is there. What did he say? Show PC annard, sir. PC we computed. Balance sheet I will draw. In between, one more line is there. What is the meaning of that? What is the meaning of that? Discharge of PC means what? Pay PC, huh? No. PC we compute chesante pay cheyadaniki. So what is the meaning of discharge? No, shares only, no. Discharge means what exactly? But chudandi sir, discharge of PC ki entry they ask you, adi we know. Vendor account debit to share capital bank, adi discharge of PC entry. You know what is the meaning of discharge here? Pudu Fox anedi purchasing company. Box, Cox both are selling company. Neeku total PC telsu. Each company how much are you giving? Adi discharge. Each company what is there, sir? 6,000 plus 7,000? No. 6,000 plus 7,000 is individual share capital of both the companies. But how much each company ka shareholders will receive in the new company, that he is asking you to apply judgment. Sir, how will I know, sir? You have to judgment, sir. What is correct basis of allocating shares? You identify that on your own. How will you get it? On what basis will you allocate this PC to shareholders of? Sir, this is irrelevant for your answer, final answer. Because final answer is not asking entries, he is asking balance sheet. Irrespective of how much PC you give to who, ultimately it will be combined share capital of 13,000 only. Kani mere discharge of PC, if you don't show, you lose marks, because that fellow is specifically asking for that. Balance sheet purpose you need not know, because ni PC is share capital ultimately. So how much is held by Box shareholders, how much is held by Cox shareholders is irrelevant for balance sheet. But he calculation separately is asking. So shareholders of Box Limited to shareholders of Cox Limited. This what ratio will you allocate? In the ratio of net assets you allocate. You can argue that we will give it on the basis of fair value given of Box and Cox. Even that is reasonably good. Means that's not wrong, sir. But I am telling you what is ICA answer. If you say that, sir, 13,000 will allocate to Box and Cox in the ratio of their fair value of business. Your business value is more, you will take more PC. That fellow's business value is less, he will take less PC. Good enough. I am not saying that is wrong. I am not saying that is wrong, but it is the ICA answer. Sir, PC allocation is always based on valuation. A valuation etla chesaru. Business valuation you can take, net assets valuation you can take. There are many methods. ICA adopted this method. So net assets work out. Sir, what is the net assets? Net assets means share capital plus other equity ka total discount, sir. First company ki enta vachindi madi? This 9050, and for the second company it is 9,700. Allocate this, please. 6275, and this will be 6725. Huh? Otherwise it won't be 13,000. This part is called as discharge of PC. This they expect you to write. Even if you write this wrongly also, the balance sheet will be correct only. But he marks both, sir. Then alternatively, fair value also you can do. You may argue, sir, common control transaction, why are you taking fair value? I am not doing fair value for accounting or for creating goodwill. I am taking fair value for distribution of PC. That is still 100% correct. In fact, that should be the better answer. In fact, I said did this allocation based on book value of net assets. You see, sir, we don't take risk with ICA. and lose marks and miss ultimately. Right, sir. Balance sheet. Okay. Write one small wording and then we'll go to balance sheet. In common control transaction, all the assets, liabilities, reserves of selling companies are taken over and incorporated. So literally what you have to do is a question balance sheet lo every number you add a final number is final balance sheet. Actually you can leave it, but anyway, since you are not writing now, later on also you will not write, so at least I should write now. Non-current assets. Tell me, sir, who is non-current assets? PP. Don't take any fair values. Straight away go on adding. 8,500 plus 7,500. Intamadi 16,000. Who next? Investments. Investments, group it under financial assets. Investments. 1,050 plus 550. 1,600. We'll move on to current assets. Inventories 1,250, 2,504, 4,000. Financial assets. Trade receivables. How much? 1,800 plus 5,800. Cash bank 450 400. Total balance sheet का total है 28,000. Equity, share capital 13,000. Already working note did. Other equity, all the results you have to incorporate. 3,050 plus 2,700. Non-current liabilities. Borrowings are there, no? So financial liabilities. Borrowings. Current liabilities. Financial liabilities. In that also only one item you have. Trade payables. $1,000 plus 2,000. Is a mark important, sir? This is likely, very likely. So with that, your common control, reverse acquisitions, whatever models are there, they are done, sir. Recently one question came in RTP, I think November 23 only or May 23 RTP. Once go through that question, you are not solving that because it is similar to this. But this is, that question is not complete of this, that is a portion of this question. It is later on, sir. Sun limited, moon limited, one question is there. It is similar to that. Somebody is copying this, please copy that. Meanwhile, I'll search for the question. Or you search and tell me the question number. Turn back, around 70 it will be. Sun, moon. 74. Page number. Okay. Sun and moon amalgamated from 1st April 20x1. When sun and moon amalgamate, what will get formed? Sun moon. Okay, that's bad. Actually, only sun will be formed. With shares of 10 each was formed to take over the business of existing companies. So Sun Moon is a new company that is taking over Sun and Moon. So they got PPEs, investments, and the routine. Their balance sheets are numbers change. In fact, if you observe, every number 3 zeros they added. Something like that, or multiplied with 2 or something like that they did. What is PP here? 8,500, 7,500 into 2 they did. And 3 zeros added. Same sum, okay. Here also same language. Sun Moon issued requisite number of shares. Ade language, ade story. But here two assumptions are not there. Compute PC and advise discharge thereof by preparing a note and draft the balance sheet of Sun Moon, assuming that Sun and Moon are not under common control. Common control is saying చేస్తారు పిల్లలు యాడ్ చేసేస్తున్నారు అది నాకు వద్దు. So and the management of larger entity out of Sun Limited and Moon Limited will take over the control of the new entity Sun Moon Limited. Earlier somewhere they clearly told that Cox is larger and Cox will control. This time he says between Sun and Moon whoever is larger he will control. Look at the table below. Fair value of the business law, Moon is larger. So Moon will control Sun. Rest of this same sir, whatever we did adhe sum into 2 you have to do. 64B bit as it is same question. This recently RTP and MTP somewhere it came, so we copied that from there. That way many concepts were done. Question. 71 is done now.